Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, let's get straight to the first management on the show. KEI, they reported a mixed set of numbers in the second quarter. The revenue met the street expectations, but margins came in a little bit lower. To discuss more on this, the outlook going ahead, we're joined by Mr. Anil Gupta, the CMD at KEI Industries. Hi, Mr. Gupta. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, top line was more or less in line. There was some softness in smaller segments like the EHV revenues. But the problem was that margins came in at the lowest we have seen, I think, in multiple quarters. A brokerage note mentions a 10-quarter low. Could you tell us if there was any kind of one-off impact in the past quarter? And do you stick to that margin guidance of around 10.5% to 11% for FY25?
Yeah, good morning, Nigel.
Good morning.
First of all, the EBITDA margin in this quarter is around 10.42%. And if you see first H1, 6 months, it is 10.88%, which is in line with the guidance. This quarter, a small 0.5% margin is impacted due to extraordinary fluctuation in the copper prices, and which led to little bit fluctuations in the margins due to inventories. Inventories in the June were very at high copper prices, and in July and August, because of the LME fall, we had to adjust the prices. So, but if you see overall, full year or first half, we are, in line with our guidance. And the H1 is around 10.88%.
All right, Mr. Gupta, the reason for the difference in the margin, absolute margin number, is because we are not including the other income, and I presume that you're including the other income. Be that as it may, copper prices were higher, so that impacted margins, but you're expecting things to recover. So in comparison to your calculation of margins in the first half of the year, what should the margin improvement be in the second half of the year, if you could help us out with that number? And do you stick to your revenue growth of 15 to around 17%, which you have done in the first half?
Yeah, I stick to our revenue guidance of growth of 15 to 17% and EBITDA in the range of 10.5 to 11% in the whole year.
Yeah. Mr. Gupta, hi, good morning. Just a quick word. We're in election season once again, and the model code of conduct, etc., will kick in. Any implication because of that? I mean, of course, Maharashtra, but it's a large state, Jharkhand as well. Any impact in the quarter?
No, I don't think there will be any impact on the quarter, because the orders are ongoing, and we are not taking direct a lot of direct orders from the government utilities. So the contracts which are going on with the EPC contractors, or the orders which are already placed, and we are very well booked. So I don't think there will be any impact of these elections on our revenues in the third quarter.
Just to finish off one point on copper prices. So are you, earlier you told us May, June, July, etc., you were increasing prices, right? I mean, then prices started to come off a little bit. Where are we now because of the input copper prices? What's happening in the marketplace?
Yeah, we have increased the prices in line with the copper prices prevailing. And I think, if I am right, it is up by 10% compared to what it was in April or May because of the LME increase.
Hi, sir. Morning. So I just want to talk about the QIP as well. You're raising about 2,000 crores, right, with this equity capital fundraise round that you're doing. Just tell us, how this will tie in with your capex plans, because you've already shared with us you have pretty aggressive plans. I think almost 1,000 crores being put to work this year. That's a street estimate, and then you have another 500 odd crores for next year. So what is the total capex requirement for the balance of this year and next year, and how will you be using this money? And then where does that take the debt equity position to? This is all equity capital. Would you be looking at any further debt for the rest of your capex?
Sonia, our total capex in our Sanand plant is likely to be 1,800 to 1,900 crore rupees. In this financial year, we have already completed 2 brownfield projects at Pathredi and Chinchpada in Silvassa, and have spent more than 300 crore rupees in the first half on the capex. in the next 6 months, we are likely to spend around 6 to 700 crore rupees at Sanand because no other capex is going on at the moment. And in the next financial year, balance of 8 to 900 crore will be spent. So this QIP, the exact figures are yet to be decided. We have taken an approval of 2,000 crore from the board. But, overall, we are going to spend 18 to 1900 crore rupees at Sanand in this year and next financial year. So this QIP is basically meant for, funding the capex requirement.
Okay, all right. Sir, your debt in the books is what, 450 crores? Net debt?
Yeah, it is. Yes, 450 crore. But it includes majorly channel finance. So the actual debt, is very less.
All right, Mr. Gupta, I just want you to clear the air because yesterday as well, many sell-side analysts were wondering why is Mr. Gupta going to be raising money via the QIP route? Is there some inorganic growth on your mind or is it purely for the capex requirement? Is there an acquisition you're looking at?
No, we are not looking at any acquisition and it is purely for the, capex requirements.
All right. And the timing of this, sir, will it be somewhere in the Q3?
Yeah, it is likely to be in the Q3.
So just to understand, I mean, I'm looking at the shareholding. Promoter group currently has about 37% shareholding in the company, right? Now you're issuing further equity capital. At what level of shareholding are you comfortable owning? Will you be are you okay with some dilution? Would you want to eventually buy back more from the market? Well, what's the promoter intent in terms of how much of the company you want to own?
See, with this QIP, my dilution, promoters group dilution may be around 2 to 3%. So we are quite comfortable with owning 35%, and we will look at buying back some of our shareholding from the market, especially
over what period, and what is the level of shareholding that you want to maintain?
We want to maintain anywhere between 35 to 36%. And I think we will be able to maintain that.
Okay, all right. I'll just try my luck with this one last question, maybe slightly tangential, Mr. Gupta. But, is it a big diversification for a sort of cable and wire company like yourself to go into optic fiber? Or does it take a lot? I don't know. That's why I'm asking. So, for example, some of your competitors who also have optic fiber businesses are expected to get large orders from the BharatNet program. Just wanted to check with you about that.
Yes, of course, it is absolutely a different product. Although the processes are similar, but the plant and machinery is absolutely different. And we have seen that these products have very high fluctuations in demand pattern from time to time. The demand pattern is not steady because when the BharatNet or some BSNL tenders comes, there is a large demand. And sometimes they don't come out with any tender for around 2 years or 3 years. So the steady revenues, if you check other companies also, may not be there in this product.
Okay, very lumpy, basically. Got that. So thank you very much, Mr. Gupta. Appreciate you joining in, and we'll speak again soon. Thank you very much for your time here on CNBC TV 18.